The relatable struggle. Have you ever checked your bank account, seen almost nothing there, but at the same time felt like you should be doing okay? Busy but broke. Maybe you're working nonstop. Maybe clients owe you money. Maybe your business looks successful on paper. Reality hits, yet when rent is due, or payroll hits, your stomach drops. Record profits announced. Now imagine this. You work for a company that just announced record profits. Public celebration. The CEO sends a glowing email. Investors are celebrating. The company's stock jumps. Everything looks perfect. Payday approaches, but then payday comes. The shock, and suddenly, there's no cash. Consequences, salaries are delayed. Bills are postponed. Confusion, and everyone is confused. The big question, how can a profitable company not have money? The core revelation. This is the moment most people realize something important. Profit versus cash. Profit and cash are not the same thing. Profit is flexible. Profit is an opinion. Cash is absolute. Cash is a fact. Accounting versus reality. Profit is calculated on paper. Cash is what actually hits your bank account. Rules versus real life. Profit uses accounting rules. Cash uses reality. Let me tell you a short story. The big sale. A company sells $10 million worth of products. Revenue recognized. They record the sale immediately. That's revenue. That's profit. Payment delayed, but the customer doesn't pay today. They promise to pay in 90 days. Rich on paper. So on paper, the company looks rich. Broke in real life. But in reality, the bank account is empty. Obligations don't wait. Employees still expect salaries. Suppliers still want payment. Rent is still due. How companies fail. This is how profitable companies go broke. The hard truth, because bills are paid with cash, not profit. This is real. This isn't theoretical. Let's talk real companies. Famous collapses. Many famous companies collapsed while still showing profits. The pattern. When analysts looked closer, they found the same pattern. The real problems, massive receivables, long payment cycles, weak operating cash flow, risk confirmed. Studies show companies with profits but weak cash flow are far more likely to fail. Confidence versus reality. Profit made them confident. Cash reality destroyed them. The objection, now you might be thinking, okay, cash matters. But profit still matters, right? Yes, it does, absolutely. What profit tells you? Profit tells you if your business model works, if pricing makes sense, if costs are under control. What cash tells you? But cash flow tells you if you survive. The difference, profit asks, am I smart? Cash asks, am I alive? You need both. Bring it home. So what does this mean for you? For employees, if you're an employee, this explains salary freezes. For business owners, if you run a business, this explains why growth hurts. The dangerous trap: sales rise. Profit looks good, but cash is tight. Better questions. Stop asking only, am I profitable? Start asking better questions. Cash questions. How fast do customers pay me? How long do I delay paying others? How much cash do I actually have right now? The final truth, because profit can lie, but cash never does. Tittle payoff. That's why the day profit lied. Cash told the truth. Reassurance. If this story felt familiar, you're not bad at money. You were just taught the wrong metric. If this helped you understand money better, like the video. Subscribe for more stories that make finance make sense. Final hold. Because understanding cash flow is the difference between looking successful and staying alive.